Why it is necessary to rebalance a portfolio, and what are the advantages by doing so? Our chief financial planner, Mr. Ramalingam, will get us through. Ramalingam, the screen is yours.
You have 70% exposure in equity, 30% exposure in fixed income. You started your portfolio with that. You have 10 lakhs invested, 7 lakhs in equity, 3 lakhs in fixed income. Now market crashed. What should you do? Now like 70-30 ratio is not there. Now when you again bring it back to 70-30 by investing more money or withdrawing from debt to equity, when you do it, you are optimizing the risk here. Or when the market is bullish, you have invested 7 lakhs in equity, 3 lakhs in fixed income, market is bullish now, your 7 lakhs itself has become 9 lakhs. Now withdraw some money from equity and put it in debt. Means bring it again back to 70-30 ratio will help you optimize risk, will help you reduce risk. So that is the main reason why you should go for rebalancing your portfolio. Then second logic which you have to understand is when you are optimizing your portfolio, when the market is down, you withdraw from debt and put it in equity. When the market is up, you withdraw from equity and put it in debt. So that way, some portion of your portfolio will be buying low when the market is down. Some portion of the portfolio you will sell when the market is high. So buying low and selling high is an inbuilt process when you do this asset allocation rebalance. Also, rebalancing is needed to ensure liquidity for short-term goals. Say you have a long-term goal in 15 years time frame and you are investing for that in equity predominantly. Now 12 years are over. You have just 3 years to meet that goal. Now you have to rebalance that equity and put it in short-term debt funds, right? To meet your short-term goals, again rebalancing is needed. When your long-term goal is becoming short-term, again rebalancing is needed. Rebalancing is not only done between equity and debt or within the asset classes. Within an asset class, there are different subsections. Say, for example, if you take equity, in equity you have got large, mid, and small. In the last 1 year, mid and small have overgrown. Even that has to be rebalanced. Now, like mid and small may be overvalued, large fairly valued. Now, how do you rebalance it? If you are not rebalancing it, you have high exposure to small cap and mid cap. Tomorrow, when small caps and mid caps correct, you will have much bigger fall in your portfolio. To adjust that, rebalancing your large, mid, and small is also needed. So, rebalancing is needed for optimizing risk to some extent to buy low and sell high to ensure liquidity for your short-term goals. Rebalancing is needed.
Thanks for your detailed answer. If you have any doubt regarding this or any other financial or investment decision, don't hesitate to book an appointment with our financial expert. The link to the appointment is given in the description below. And also, would you like to know more about finance and investment? Then we would recommend you to attend our live webinar. The link to the webinar is also given in the description below. The webinar is absolutely free. If you like this video, hit like, and if you are new to our channel, please do subscribe.